Hey everybody, welcome back to Dividend Stockpile. Today I'm very excited to be joined by Perth Tolle, founder of Life and Liberty Indexes and the creator of the Freedom 100 Emerging Markets Index and the ETF that tracks FRDM. Perth has created a unique way to invest in emerging markets by weighting countries based on their freedom levels. And we're going to dig into our story, how the index works, how it's performed, and what investors should know. So Perth, welcome to the channel.
Thanks so much for having me.
Absolutely. I'm super excited to have you on. I've been investing in your ETF for a long time, and I think it's one of the best strategies when it comes to emerging markets. I'm really excited to dig into the details with you. So I guess let's start at the beginning. So the idea of connecting freedom and investing is very different than most traditional emerging market ETF strategies. So can you tell the story about how you came up with the strategy?
Yeah, so I was working at Fidelity when, we had a lot of clients that, said to me, for example, I had a Russian client that said, I don't want to invest in Russia because it's like funding terrorism. And I happen to feel the same way about my home country. I'm from China, and it's a very different world than growing up in the US. So there were things that I saw in China that I felt like investors were a bit myopic to. Things like lack of transparency, opacity of ownership structures, government interference in private markets, and all of these things affect investment returns. And so I wanted to create a way for emerging markets investors to be able to have a diversified allocation without, one, funding autocracies, and two, to have a freer kind of country set, a higher weight to freer countries. So that's kind of where this came from, is a combination of my background personally and also professionally through my work as a financial advisor, and just seeing what was available out there and what clients wanted, and seeing that gap.
That was one of my things that I was always hesitant to invest in emerging markets, is those countries like you were talking about, like China and other ones that I did not necessarily agree with some of their political stances or, things they were doing in the world. So by focusing on, the freedoms within the countries, it definitely makes a big difference. So why did you pick freedom as your core factor for investing in different countries and different companies themselves?
Yeah, so freedom covers so many different aspects. So for example, we use the quantitative metric Cato Institute and Fraser Institute, and that comes in the form of the Human Freedom Index and data set that they publish. And that data set has 86 variables encompassing both personal and economic freedoms. So I think it's important to look at all kinds of freedoms. So, because I think that personal freedoms and economic freedoms work together and are interconnected. So for example, we have civil freedoms like terrorism, trafficking, torture, women's rights, freedom of movement, expression, assembly, religion, the internet, civil procedure, criminal procedure, and then your more economic freedoms that we're all more familiar with, like taxation, business practices, private property rights, rule of law, freedom to trade internationally, and soundness of monetary policy. So all of these things kind of work together to create an environment that lays the groundwork for innovation and growth. So if you're a business in a country that has, basic property rights, rule of law, your contracts are going to be honored, the government can't just come and confiscate your business, you're going to be more incentivized to innovate and to grow and to provide value for your clients. In addition, it kind of even leads to peace in more peace in the world, because your enemies become your customers, your partners, and trade has a lot of benefits beyond the economic ones. So freedom is something that everybody just kind of intuitively knows is a good thing in general. There's been studies that show that higher freedom countries have lower infant mortality, higher life expectancy, higher GDP, higher growth of GDP per capita, higher incomes in the lowest income brackets. So the poorest people in the freer countries are much richer than the poorest people in the less free countries. Higher gender equality, lower poverty rates. But all of these things are kind of nebulous to investors. And what we're trying to do here is be a running scorecard for freedom in the capital markets space, especially in the emerging market space, because emerging markets historically have been so filled with autocracies, in the universe. So China, Russia, Saudi Arabia, Qatar, UAE, Turkey, Egypt. So all of these kind of countries in the emerging market space are either autocracies or trying to come out of autocracies. So it's just not, I believe, the best places to find, the best growth stories of the future. So that's the premise there.
That's one of the hard things about emerging markets or any kind of international investing itself, is that because we're in a certain country, whatever country you're from, your country, but you have limited exposure to what's happening in some other countries. So it's really nice to have a structured approach to filter out for the things that you may not be wanting to have in your investment profile. So that's why I really enjoy the way you guys do it. Now, one thing to think about, at least in my mind, is there's so many different definitions of freedom.
Mm-hmm.
Some people could focus on the economic freedoms, while other people focus on the human freedoms. So how do you address each of those conflicting or sometimes opposite approaches when it comes to freedom when you're doing your construction of the index?
Yeah, so fortunately, we are not the ones who decide, on the freedom metrics. We use these third-party quantitative metrics from the Cato Institute and the Fraser Institute. So these guys have 100 think tanks around the world as part of their freedom network, where they are gathering data. They are gathering also third-party data. So they're using third-party data, combining it, and then we are using their data. So there's two levels of third-party objectivity where we don't have to make the call and say, hey, this country is more free or this country is less free. The scores are already there. So we're using the combined country score of all 86 variables added together that these guys compile. That is the main input into our freedom weighting methodology. And the methodology automatically excludes the worst countries that have lower than average scores among the country set that we're looking at in the emerging market space, and includes the freest country set and weights them according to their freedom levels. So the higher freedom countries get a higher weight, the lower freedom countries get a lower weight, and it's all based on their combined freedom score on the country level.
I want to award those countries that have the higher score with the extra weighting in the portfolio. So when the index is built, obviously things change in the world. So how often does it rebalance? And have you seen over the years countries come and go? What does that look like?
Yeah, so the data for these countries comes out once a year. So we also rebalance once a year. The third Friday in January is our rebalance date. We have seen changes throughout the years. The fund has been around for 6 years, since 2019. The index has been around since 2017. What we found is that changes to more freedom are pretty gradual, and changes to less freedom are quicker or faster. So one of the rules that we have in the methodology is the freedom decline momentum rule, because we don't want to be catching those very fast declines in freedom levels that can happen quite quickly in these emerging markets. So the only country that has ever triggered that rule was Turkey in 2018, and they've never made it back into the index since. And that rule basically just says if a country drops more than 5 points on the Freedom House scale, it is dropped from the index, even if it's otherwise included. So we do have rules that kind of catch the downside, like a stop loss on the downside of freedom declines. But the main index, like what's been included, typically moves quite slowly. The top 4 countries have typically been Taiwan, South Korea, Chile, and Poland. There's been years, and this is a good problem to have, where Chile or Poland became very large by rebalance time, and there may be buffer rules in the future to address that. But for right now, that has not been a problem that we felt like we needed to go in and add subjectivity to. So we try to keep everything objective as possible as an index provider. But yeah, we do have some rules that catch those very quick declines. But in the end, I think freedom is something, because they also, our data providers also use quite a large number of metrics. And I think because of that, the movement is typically pretty gradual throughout the years.
You don't want to make any rash decisions.
Yeah. I mean, but we do have countries that, move in and out. So borderline countries like India has been in and out. Brazil, Malaysia, those types of countries have sometimes been in, sometimes been out. And, some of them are doing very well now. So probably will stay the way it is for a while. And over time, as the fund grows, we have gone from 10 included countries to 12 included countries. And I don't expect that to decrease. I expect that to just kind of either stay at 12 or increase from there.
Okay. And those countries that are what you call borderline, those are going to be smaller weightings in the portfolio anyway.
Yes.
So coming and going is not going to make a huge difference on the portfolio, but
Correct.
you have to have it cut off. Okay. And I mean, the strategy you guys have put together, I mean, you've been around for 6 years now. The total returns have been absolutely amazing. Can you kind of give a overview of how it's performed over the years?
Sure. And I just want to preface that by saying, it is very stark outperformance. Please don't expect this every year. We've had a great market this year. We've had, across the board, all assets. We've had very extreme events in previous years. China crash, COVID, Russia invasion. So it's all of these things in the macro environment as well, in addition to markets going our way, that have contributed to investors becoming aware of autocracy risk like never before. So I think, I want to preface with that is just the fund is, and the strategy is designed to it's absolutely, we believe that freer markets will outperform in the long run. And yes, absolutely, they have strongly outperformed in the life of the strategy. But it's designed to be tracking closely somewhat to our benchmarks. So yeah, I would expect not the same results every year. But yes, it has done very well. And so taking from our risk and return characteristics off of our presentation on the website, our upside capture has been 114% and downside capture 98%. So we've captured more upside in the good markets and less downside in bad markets, slightly. So that is kind of what I would expect. But if you look at the overall outperformance, it's incredible, and I would not expect that every year.
Of course, past performance is no guarantee for future performance.
Yeah.
But the 5-year are almost at 15% annualized return. So that's quite impressive. Even over the long run, you get all different cycles during that time period. But to your point, there's no guarantee. So let's just hope it does continue. So when it comes to the strategy, I know that you guys base it on the freedom of each country, but I'm sure there's a little bit more nuance to it. So can you kind of talk through the process a little bit of how you take your entire universe and narrow it down to your choice in holdings?
Yeah. So the input to our country weighting is just that composite freedom score on the country level. That's a combination of equal weight of all 86 variables on those freedom metrics. Once we have the country weights, which are, freedom weight is 100% freedom weighted. It's not a tilt or an overlay. There's no consideration for any other factors besides freedom. So the country weights do not change with the underlying security weight. So it's a top-down approach. So let's say we end up with 20% in Taiwan. Whatever TSMC's weight is does not change that Taiwan weight. Once we have the country weights, we take the 10 largest, most liquid securities within that country that is included and market cap weight them inside their freedom weighted country weights. We do exclude state-owned enterprises to kind of bring that economic freedom theme all the way through. And that is the only other thing that we do on the security level. We do have, that being said, we do have caps on the security level. So we have an 8% cap at the time of rebalance for 8% of the overall fund, or the index, I should say. Because if we didn't do that, Samsung and TSMC would be a massive weight. So we don't want it to become a bet on two positions. So we're capturing by using the 10 largest most liquid securities. Typically, we're capturing about 70 to 90% of an underlying market. And so in some of these markets, it's 100% of the non-state-owned securities that meet our minimums. And so, for example, in Poland, 1 year we only had 8 securities that met our minimums and were not state-owned. So it does capture the underlying markets quite well, and also keeps the fund very tradable by using those larger positions.
Yeah. So just to give a little bit more tangible, it looks like you mentioned about the top 5 countries is Taiwan, South Korea, Chile, Poland, and South Africa right now. And then the top tickers are, to your point, Samsung, Taiwan Semi, SK Hynix, Falabella, and Banco de Chile. So those are the holdings right now. Obviously, those will change over time, but it just gives everyone a sense on, what the primary countries are and then what some of the holdings. And I think I saw Taiwan is like a little over 20% of the portfolio. South Korea is just shy of that, about 20%. So there's definitely a lot of weight, and I'm assuming those are the most free countries in the index, and so that's why they get the higher weight.
They are, but I think more notably, Chile and Poland being higher weights is more of a differential from popular cap-weighted products, because Taiwan and South Korea also have high weight in, say, MSCI, Emerging Markets Index, but Chile and Poland are less than 1% in, for example, MSCI or FTSE or S&P, emerging markets indices. And when those countries do well, investors in the cap weight strategies completely miss out on that. So this year, Poland is up more than 50%. So it's something that, and it's been a couple of years like that in Poland for freedom reasons, for reasons that they have elected a more balanced government than they've had for years. And this government is rolling back some of the kind of infringements on freedom that has happened in the last kind of administration. Chile as well, right? So Chile was kind of a testament to their strength of institutions, because they actually elected a new government that we were fearing would be less friendly to business and that to the kind of the Constitution and the things that made Chile prosperous over the last 20 years or so. But that government hasn't been able to accomplish anything, because everything they initiate, the voters come out in droves and vote down. So it's kind of a testament to the power of institutions and checks and balances in both of those countries. And this year we're seeing kind of similar thing in Korea, where civil society rose up to stand up against basically the militarization of government that was trying to happen. Civil society rose up against it and shot it down. And South Korea is one of those countries that is not afraid to hold truth to power and to bring power to accountability. They always have some, a president or past president in jail or going to jail or coming out of jail. I mean, so yeah, we see a lot of these things that sometimes we have concerns in these markets about what their next government is going to do, about, country level governance. But we are invested in those countries that have stronger institutions, stronger rule of law, stronger protections for personal and economic freedoms, and for investor protections and kind of IP protections as well. Mm-hmm. And so these are the places that should be not only kind of safe havens in those times, but also the places where we'll find the next big growth stories going forward.
Yeah. And so, kind of thinking about that, China has been, I think the number 2 economy for quite a lot of years. And so obviously for real reasons, China's not included in this particular index. But because they are such a large contributor to the global economy, what do you say to those who might say, well, you're missing out on such a big market? How do you justify that? What would you tell people?
Well, I used to tell people that when China, that is our biggest differential, because China, throughout the time of our fund has had between 30 to 40% weight in the market cap weighted indices. Mm-hmm. And we had always had zero weight to China. We had always had no China, no Russia, no Saudi Arabia, Egypt, Qatar, so forth. So so yeah, that's the biggest country differential. However, I would say that emerging markets is more than China and more than the BRICS. And it is countries like we're talking about, Chile, Poland, some of these other smaller countries, Malaysia, Indonesia, that are growing very fast, that have very favorable demographics, that have the business environments to foster growth and innovation, and have better potential going forward. You don't want a country where a company that does well becomes a target of the government, right? You want to incentivize those big growth stories, because as an index investors, you're going to catch, some companies that some of your positions in your basket in the index will go to zero, and some of your positions will become the next Apple, Nvidia, Google, and those are the big growth stories that you want to catch. And in a socialist environment or a very unfree environment, you can't be a big growth story without becoming a target. And so it's highly disincentivized to grow. And also it's, the government can come in at any time if you become big and literally take your company or tell you can't go raise funds overseas, you can't have an IPO, you can't make profits. In 2000, was it 2021 or 22, they said all the edutech companies in China have to be nonprofits now. So these are not things that are conducive to finding those big growth stories that investors in index funds are basically investing for. So yes, China is a big piece of the global economy, but are they going to become number one anytime soon? Are they going to grow as fast as some of these smaller economies that are up and coming? I don't think so. And I don't think that we should be missing out on those faster growth potential countries by having, say, 35% weight to China.
So with this being Dividend Stockpile, we're our income investing channel. And I know that this particular ETF is not necessarily dividend focused, but you guys do pay a pretty solid dividend. How do you see that FRDM can fit into an income focused portfolio if you do?
Yeah, so I think on it was you that said on one of your videos that, dividend investors are investing in these companies because they're seen as the more stable, better stewards of capital type of companies. And so freer countries are kind of like the country level version of that. They're the more stable, better stewards of capital, kind of like a higher quality like countries. It's like a quality factor on the country level. So dividend investors, that's kind of what they're looking for. And this just kind of does the same thing on the country level, which is the foundational level that you should be looking at when you're doing international investing, especially emerging markets investing. Once you have that country level, the basic freedoms in place, then we can talk about, okay, growing dividends and other factors and things. So yeah, it's kind of similar to like a quality factor on the country level. You have countries that are more stable, more conducive to growth, that steward their capital more responsibly. And so that's kind of the kinds of things that I think dividend investors are looking for.
Awesome. I love it. All right. So as we wrap up, I'd love if you were able to give maybe like one key takeaway of why people need to focus on freedom and how FRDM can provide that to investors. What would you say to them?
I think in the end, we want to be invested in what we have strong convictions about. So one thing that I think this strategy makes it different from others is that we're not, some highly complicated, overly erudite type of thing that nobody understands. This is something that's very intuitive and that most people can understand why, if you treat your people better, your country will probably do better in the long run and businesses will be more prosperous. So I think it's a strategy that if you invest in what you believe in and what you have high conviction about, it's easier to stick with when times are bad. So we've had times, when like the first half of COVID, first half of 2020, where China outperformed everybody and we very much underperformed. Last calendar year, 2024, China outperformed and we underperformed. This calendar year, 2025, China outperformed broad emerging markets cap weight. And we outperformed even China. So you never know, but I think in good times and bad, this strategy, having a publicly traded fund, you can see the flows and people stick with it no matter what the market environment. And by doing that, that's going to in itself improve your outcomes in the end.
Perth, really appreciate all the information. Just as a recap, it's FRDM, the Freedom 100 Emerging Markets ETF. I'll make sure to put all your contact information on the page where people can get more information. But I really appreciate you coming on and talking to us about this great ETF. Thank you so much for bringing it to the market, and hope for continued success for you and your shareholders. Really appreciate it.
Thank you for having me, and I hope that you as a Freedom investor will continue to be rewarded.
Awesome. Thank you so much. Thanks for watching. While you're here, check out this next video to learn more about dividends, income investing, and option selling. And while you're here, make sure you subscribe. Click the like button. It really does help. Thanks.